Here we go. And this session is starting now.
Hello. Thank you for joining our webinar today, which is about real-world asset tokenization and where we will go beyond the bus. I'm Lise. I'm here with my colleagues Tallis and Fillip Blagojevic from TVVIN. So we're going to just start this session by doing a quick intro so you can get to know us a little bit better. Thomas, do you want to start?
Yep, thank you, Lisa. It's great to be here. So as Lisa said, my name is Thomas. I'm the CEO and co-founder of TVVIN. A very brief synopsis on who I am and how I got into this space goes back to 2016, where I took an initial idea to the FCA, which is the regulator in the UK. It was an alternative way for people to save for their latter days, or AKA their pension. And it was a platform that was utilizing or investing into crypto. It was very premature. We got, actually, to give the project a lot of credit, we got quite a way with the FCA, but ultimately they couldn't give us a timeline on when regulation would be able to give us the appropriate licensing. But from that 2016/17 moment to where we are today, what I've kept, or what's followed me is a red thread where I'm very passionate about creating new financial tools that can be made readily available really to anyone everywhere. And that is one of the essence and one of the core aspects of TVVIN, is that we are utilizing or using tokenization to open up illiquid assets and provide them in a liquid format to a global audience. Thanks very much.
Thanks, Thomas. Thank you. And Fillip, do you want to lead on?
Yeah. Hello. My name is Fillip. I am a tech lead in TVVIN. I'm representing Thespian, the tech partner of TVVIN. I am active in the Cardano ecosystem since 2019, 2020. Deep into started in Catalyst as a community advisor, veteran community advisor, proposer. I held a lot of roles within the ecosystem, went through a lot of, educational materials, Plutus Pioneers, all of that. So I am, and in Thespian, we work on Cardano projects, but also on other blockchain integrations. And we are really excited to work with TVVIN and to bring real world assets tokenization to Cardano. We see it as well as an important narrative and an impactful thing. I am sorry, is my audio okay? Do you hear me?
It's a bit low, so maybe just speak up a bit.
Let me try to. Well, I'm not sure if I can improve it. Is this any better? No?
Yeah, it's a little bit, yeah.
A little bit. If not, people just have to turn up their own volume. That helped for me. So
okay,
that's what I did.
I'll turn it down when Thomas is speaking and up when you're speaking.
I'll speak a bit louder than I suppose.
Yeah, thanks, Fillip. And I'm Lisa. I'm the CMO and co-founder of TVVIN. My background is from working in marketing for the last 20 years. I've run 3 significant Nordic marketing agencies, both within event, influencer, and PR, working with companies such as Tesla, Meta, Coca-Cola, Samsung, almost all global brands that there is when it comes to their marketing initiatives in the Nordics. And then during COVID, where the type of marketing we were doing had a bit of a down period, I ended up very much investing into crypto and spent a lot of time, kind of getting to know how crypto marketing is done, but really from an investor point of view. Then ended up becoming the CMO and co-founder of a crypto company, moving on to becoming an advisor for several crypto companies when it comes to marketing, brand and communication. And then this year, started up Twin together with Thomas and assembled this amazing team. Eileen was supposed to be here today, but she had to travel to London and couldn't join after all. But I'll say a few words about Eileen because she's part of the core leadership team here at Twin. She has a background, she worked several years for BlackRock, and in traditional finance, she has several of the most advanced licenses that you can get coming to investment. She ventured into running her own crypto hedge funds, and basically she has been essential in devising our monetization and financial models. And she also has a background from RWA tokenizations, having been part of tokenizing a vineyard in France previously. But I'll move on to the next slide. So we usually say that Twin works like fiat, acts like crypto. And in many ways, that's kind of a truth and a half-truth. We believe that crypto was the proof of blockchain, or a proof of concept for blockchain technology. But now it's the time to bring the real world on chain. And with real world asset tokenization, you're bringing some elements of what is traditional finance on chain, and actually you're broadening the scope of what blockchain can be used for. Also, just a few words about Twin, because sometimes I hear people say TVVIN, but it is actually pronounced, as you see here, Twin. And the two V's in the way we spell Twin is symbols for the tokens and the asset that stands behind the tokens. So like twins in real life, they are separate, but they also have something very essential that combines them together, always intertwined. Let's look at some twins here. Thomas, can you explain what we're looking at?
Yeah, I mean, when we get to the sort of the Q&A section, there are some prizes if anyone can guess where these cows come from. But essentially, it's an island, and it's really the purpose of this slide is just to give a bit of a sort of background into the genesis of how Twin came about. So these cows are Guernsey cows. Guernsey being in the Channel Islands between Britain and France, and Guernsey is renowned for its dairy, but it's also a phenomenal financial centre along with its sort of larger sister island, Jersey. I have a consultancy in Guernsey, and it was in 2022, whilst I was also doing some advising for other projects within this sector, that I started to get to know who is now our partner. They've been in the precious metals business for decades. They have an excellent reputation. They handle 4 precious metals, which are all LBMA certified, and that's gold, silver, platinum, and palladium. And when I was getting to know the group CEO back in mid-22, what he was understanding from his own client base was that tokenization of precious metals as investment assets were becoming more and more talked about, and he understood that they as a company should invest time into figuring out what they ought to be doing to keep relevant, really. And when I met the group CEO, we started to get to know one another, and I basically said, made the proposition that rather than they trying to bring the adequate resources in-house, which would allow them to tokenize the physical assets, what about if they worked with us? And that's really the starting point of Twin, and where we started to deep dive into a partnership, which saw us sign heads of terms at the beginning of 2023. and that partnership is now fully embedded and ready for us to develop the platform and to start offering our initial MVP, which will be our gold token, which is under the ticker VBG. So Guernsey is not just about clotted cream and excellent dairy, but also where Twin was born. Thanks, Lisa.
Thank you, Thomas. And talking about real-world assets and tokenization of real-world assets, it's becoming very much a buzzword within crypto, but also outside of crypto. We see that tons of legal offices, auditing companies are issuing reports, holding webinars, holding seminars for their clients about tokenization. The International Bank or the Bank of International Settlements, used, I think, 10 or 15 pages in their report last year, just dedicated to tokenization. It is becoming more and more apparent that this isn't just a buzzword for the blockchain or Web3 society. It's becoming much more of a future step of where finance is going. So why is that? Well, if you look at one hand, what is real-world assets? You have precious metals such as gold, silver, etc., which is twin starting points. You have minerals, agro-commodities. You got real estate, debt, and alternative investments, equity and venture capitals. And I mean, the list can go on. It's a vast amount of real-world assets out there. But after they become tokenized, you suddenly change the game in how these are traded and what can be done. You, for example, get instant settlements. You have the potential for self-custody, a much, much broader market and access for a huge amount of potential investors worldwide. You open up for 24/7 trading, and you create liquidity for these real-world assets. So that's just a general overview of what tokenization really is about.
Yeah, and also what I'll add to that is that it breaks down the barrier to entry. So tokenization allows for unit sizes to be remarkably small, which allows for a global adoption. I mean, if you're in the business of investing or buying, for example, gold, it's not so easy to buy a very small amount, for example, 1 gram of gold as an investment or as an asset that you hold as an investment. Whereas with tokenization, whether it's gold or agro commodities or whatever the intrinsic value, whatever the intrinsic asset is, the tokens are able to be broken down into very manageable unit sizes, like I said, that can be then made affordable really to anyone and everywhere, wherever they may be.
That's very correct. So Thomas, do you want to lead us on into this next section?
Yep. So we do have an enormous amount of passion at Twin to bring new and novel financial tools to a global retail audience, and we've made that clear. And I drew my comparison to a project that I started, as I said, back in 2016, and that passion is it's critical if we, it's all about giving people more options, and at the moment a lot of the options that most people have are pretty limited, and tokenization really opens up the types of options that people can choose to enter into. But if we're going to see real mass global adoption into tokenization, what we also understand is that there needs to be, prior to an approach where we offer these new services, these new products to retail, we need to see institutional interest increase. Very simply, if the average man on the street is looking and seeing that company X or Y, that they've gone into the tokenization sector, then that gives them confidence. And it really is a sort of it's really as simple as that. Is that once we start to create an environment where institutions feel comfortable to come into our sector, and that is what tokenization is now doing, then the more institutions that embrace crypto and utilize tokenization as their way into crypto, then we also understand that will allow for a wider adoption from the retail side to follow, because of their because they will feel comfortable that the institutions have also started to embrace this.
I might add here, because we've seen over the last year that, for example, different institutions, huge banks, for example, have started to tokenize some of their assets. What they're doing is that they tokenize it on a ledger, which is just open for the institutional clients already being served by, for example, that bank. So it's not really about tokenizing it on blockchain. You could say, I believe it's like a step-by-step process, because it's a bit like when an industry is disrupted, they want to be part of what the future holds, but they are also very skeptical to changing too fast. But I think the real winners in this will be the ones who tokenize assets on the blockchain where it's public, because that's where the real transformation will happen, rather than just keeping it within these closed ledger environments. So I just wanted to add that, because that's something we've definitely seen. But I'll move on to this next slide. Thomas, do you want to jump in on this?
We draw a lot of attention at Twin when we're talking about real world assets, as regardless of whether they are precious metals or raw materials or agri commodities, what the asset in question tends to present or offer is a more stable value. So what we mean by that is that if we draw out, for example, silver or coffee, for example, over the last 5 years, what we do see is that it maintains its value more or less, or a lot more stable than, say, other assets, namely crypto. So the stability that real world assets offer, we believe will be very attractive, not just to institutions, but also to the retail market. And by putting these assets or having them standing behind tokens in a one-to-one format, then you're able to then offer that same stability on chain, and allowing these illiquid assets to then move into a fluid environment.
Yes, and I think you've already actually touched on this, Thomas, but this is about the affordability and accessibility through fractionalization, which is possible through tokenization, right?
Sure, and it's actually good for both sides, because some people say, well, if what's the upside to the one who's selling the asset? But essentially, if you have a much wider audience or market that you're selling to, then you're probably going to see that the proportionate amount that you're getting for a unit, and it doesn't matter what that unit is going to be higher. So the more people that are interested in your products, then you can probably make the assumption that the higher unit price, or a higher unit price, will also follow. So it's good for the ones who are actually selling the asset, and for the ones who are actually buying it. As we mentioned before, up until tokenization, they really, for most people, they haven't really had the opportunity to buy, the types of real world assets that tokenization are now bringing into, or bringing onto the scene, as it were. So that's their win, is that up until now, they haven't had the opportunity, whereas now through tokenization, they do. So, you know, both sides are seeing the upside. And as I mentioned before, the key is bringing or creating unit sizes or tokens that represent a certain amount of the asset that really is affordable, regardless of whether you are in, you know, Bogota or whether you're in, you know, a sort of, you know, or Britain.
Thanks. Fillip, do you want to jump in on this one?
Yes, sure. I was answering a traceability question asked by one of our participants as well. So of course we know that the tokens on a public blockchain like Cardano are very transparent. You can follow the funds from the moment they've been minted through every transaction, through until the point of burning, if that's what we want to call it, because that's what our flow looks like. Immutability is, of course, you know, no transactions can be reverted. Everybody can see what's going on, and our system caters for KYC or KYB, depending on retail or institutional investors. That is important for legality. So we go through KYC or KYB whenever someone buys or sells a gold token. But once you have it in your ownership, we cannot take it away from you. We cannot freeze it. We cannot, you know, destroy it. It's yours, and you can do with it as you wish. And in the moment of you selling it through our platform, we burn those tokens and pay you in money. And also there is an alternative where you can actually redeem your tokens for the physical gold that you purchased.
Thanks, Fillip. And great that you're answering these questions. You're keeping your eye on that. So going on to what real-world asset tokenization does, it makes it liquid and tradable and make it accessible instantly. And thereby, you also open up to some other possibilities. And what we're looking at, Twin, is implementing digital real-world asset vaults where depositors can grow their token holdings through the underlying asset being collateralized and put to use in traditional low-risk financial instruments. So this is something that we are planning to do in the future. It won't be right from the start, but quite soon after, when we have the appropriate licensing, we'll be also offering that. So this is something quite unique that doesn't really come into play for people when they invest in gold presently, because usually people or institutions invest in gold just as a hedge against inflation. They normally allocate between sort of 3 to 10% of their total assets, for example, to gold, but it just sits there. But what if you could potentially grow that holding? So it has a lot of interesting possibilities, and that's just one example. There are many examples relating to different types of assets. So we've talked about real-world assets and the buzz around it. It certainly has a lot of momentum. These are just some figures and forecasts, which shows that by 2030, there is an expectation that the RWA tokenization will grow to more than 16 trillion, which will be 10% of the global GDP. I also read a recent report by Bank of New York Mellon that when they had done market research, it showed that I think it was 91% of institutional investment managers are wanting to buy a tokenized format of the assets or whatever they normally have invested into. They are now ready to make that transition into buying a tokenized format, which is very encouraging.
Yeah, I will on that. I mean, just on that point, Lisa, I will add that, of course, it makes a lot of sense because you you're able to be able to make your decisions in real time and act, also in real time. So if you have a token that is backed by a particular RWA, whereas before, if you wanted to come out of that position, you needed to most probably contact your broker, and sort of in the sort of conventional way of actually selling your asset is rather convoluted and antiquated, but it also takes time and is pretty expensive. So this is really where they the understanding is that as long as the token has a one-to-one backing in that asset, so there is no algorithm, or there's no sort of synthetic basis that's trying to sort of price the token. It is the asset is fixed to that token. It makes a lot of sense to then put sort of invest into into a tokenized format, simply because you are able to, if you want to keep your position, fine, keep it as it is. But if you want to maneuver your position quickly and also much more affordably, then there are huge advantages.
Sure. Thomas, would you quickly just talk us through this point here, which I think is an important point for anyone who wants to create a real-world asset tokenization company, but also be mindful. I think we have about 15, 17 minutes until we have go into Q&A.
Well, I saw one of the questions in the online Q&A is that are we ready? Is the regulation there? And the simple answer is yes. But for anyone that's wanting to create a tokenized platform, we would suggest that you don't try and sort of cut corners in seeking very good legal counsel on the jurisdictional or which jurisdictions will serve you best. The world is catching up, and there are some jurisdictions that now understand that they need to sort of work on double time. Having said that, there is still certain jurisdictions that have far more benefits than others. So please do look into exactly what type of asset you're intending to tokenize, and spend the time and the resources in seeking as much advice as possible, and making sure that the jurisdictions that you end up going for match the service that you intend to roll out. Lisa's mentioned that we have a really phenomenal sort of monetization service that we're planning, where we are able to then take the underlying assets and put those underlying assets to work in the conventional financial markets in different verticals, and there would be potential APY for both, in our case, the Twin platform and the Twin token holders to enjoy. But those particular services will require us to be licensed, for us to be working very closely with the regulators in the different jurisdictions that we've chosen. So this is just an example for what we now know works best for Twin, and especially with tokenizing not just gold, but with the three other precious metals that we have access to, which is the silver, platinum, and palladium. So there is a rather neat structure where we know that coming out of Guernsey, which is where our parent company is incorporated, we then chosen select jurisdictions that have at least now the very best regulation that works for a platform like Twin that is tokenizing precious metals.
Thanks. And this next section is really about ensuring key functionalities, basically the pillars of what is necessary really for a real-world asset tokenization platform to become successful. So again, mindful of time, Thomas, I'm going to let you onto the next slide before Fillip goes into more the technical and user experience parts of the Twin platform.
Yeah, and with being conscious of time, if there is anything that anybody wants to ask in a deeper way, let's take that when we open up to the sort of the question side. Twin is embracing regulation. We're great believers in creating more diversification within DeFi. Having said that, we also understand that in order for real global retail adoption to take place, then there's only one way to go, and that is to work closely with the regulators and to seek the right type of licensing that the regulators require, in our case, the Twin platform to go after and obtain. What I will also point out is that to be a user on the Twin platform, there will be KYC, or if you're an institution, KYB process that will also then make sure that you are eligible to be trading and to be interacting with Twin. And of course, that's to ensure that AML is being kept abreast with, and that there is essentially no dirty funds that are being channeled through our platform. So we've already started speaking with the regulators. We actually started early in 2023 once we strategized our at the different locations that we're going to be incorporating in. But again, I can't emphasize just how important it is for anyone that's thinking about tokenizing either one RWA or a series of RWAs, that once you've looked at the jurisdictions that you believe best serve your products, as early as possible, start talking with the regulators. We have found that they've been very open, very welcoming, and they've really appreciated the fact that we've been proactive by approaching them and explaining what we intend to do, and listening to what they have to say in return about the different elements that we will need to secure and obtain in order to be trading and complying with the regulation.
Thank you. And I mean, there's many areas here to go into, but again, we can answer that in the questions later on.
Sure.
Fillip, you want to
Yes,
take it from
so
here?
there is of course a technical aspect of this project, and I will take a few minutes to explain, the possible ways to do this tokenization. I appreciate there was a question about standards. Thank you for that question. We have discussed a little bit internally. We are aware of the ERC 3643 standard for RWAs on Ethereum, and we are aware that something like that, a CIP or a set of CIPs, would be very beneficial and necessary on Cardano. So that's something that we're thinking about as well. But before that, so how do you actually do this, right? In order to have this process that we discussed, people need to let's go through the flow of buying gold tokens, right? So a person would connect their wallet and purchase the tokens through our platform. At the moment of purchase, so when we receive this payment, whether that payment will be in cryptocurrency or in a bank transfer or through PayPal or through something, we don't have to get into that. But at the moment that we receive that payment, we mint the tokens, right? So we mint the tokens and then we send them to the buyer, to the purchaser wallet. And on the other hand, when the user wants to sell those gold tokens through our platform, by the way, we kind of keep the peg by saying we have the spot gold rate that you can always buy and sell from on our website. So if you want to, take those tokens and trade them on another platform, on a DEX, or however you prefer, if you can, we ensure you the spot gold price on our platform. So anything else is basically arbitrage. If you can sell them for more, if you can buy them for less, that's on you. That's how we keep the peg, by ensuring this price on our platform. So when you want to sell those tokens, you come to our website, you send the tokens to us. Once we receive them, we initiate the transaction to your wallet or to your bank account, and we burn those tokens. Now, in order for us to be able to dynamically mint and burn tokens, we have to have what is known on Cardano as an open token policy, right? We cannot have a locked token policy that disallows minting and burning. We have to have an open token policy. So there are different ways to have an open token policy from the early days of NFTs and NFTs, even before Bluetooth or smart contracts were available. We have these native scripts that allow us to mint native assets on Cardano. So that would be the simplest way, is just to have an simple open token policy. The issue with that is the security, right? If you have that, you have a very clear single point of failure, which is the token policy private key. If that private key gets compromised at any point, your system, your token is basically compromised, because the attacker can mint, infinite amounts of that token, defeating the whole purpose. But it's definitely a way, it's possible to do it like that. Another way is to have minting through the smart contract. This allows much more flexibility and enables security checks both on chain and off chain to create and destroy these tokens. It of course increases complexity. It's more complex, it's more expensive, but this is something that we consider necessary, and not only to have a smart contract, but to have a whole system of things. Security checks. We need to have risk audits. We need to have assessments of points of attack. So for that to really work properly, we need to be insured and transparent about all of those risks at all points. And of course, even however safe the system, however secure the system is, we always consider the absolutely worst possible scenario. And for that, we have disaster recovery systems. Like, what happens that everything crashes? How do we recover from that? Right. We think that that's very, very important, because trust is key in this whole setup. People need to be certain that the token that they own can be redeemed for gold, can be pegged to that value of gold, and down the line other assets. And if that trust is lost, the whole system fails. So that trust is absolutely crucial. Okay. There was another question as well about the asset traceability and transparency of operations. You all, I'm sure, are aware of Cardano and how it is a public permissionless blockchain. Everybody can see, check the amounts, follow the transactions, follow the flows of tokens. You can always check the asset ID of the asset token and of our utility token and of all of our asset tokens. That would be on our website, on our communications channel, so that you can always be aware that someone is not, faking the token. As I responded to someone asking about traceability, the partner that we have that actually holds the gold physically is committed to ensure transparency and all the necessary documentation to prove that gold is uniquely attributed to the tokens that you own. And definitely in the first iteration, that documentation will be kept off chain, and it will be part of it will be most open publicly to everybody to see, and part of it will be open to. That's how I imagine part of it will be open to the holders of the tokens, like the most details will be available to the token holder. And then at some point we want to move these certificates on chain, you know, possibly cross chain. We want to look at standards. We want to have this, you know, follow the trends and to set trends about best practices of traceability and transparency. So I did mention that we have both institutional and retail investors, purchasers. Technically, there's not a lot of difference, you know, from a technical perspective to serve both of these groups, but from the business side and from the user experience side, we do find that these two groups are a bit, you know, different. We do expect, and talking to institutional investors, they don't really expect something to happen within seconds. They expect for large amounts to be, you know, for it to be a more detailed process, more personalized process. Some of these entities have custodial wallets, custodians, you know, other companies that custody their cryptocurrencies. So all of that needs to be catered for. So the institutional platform will have a more individual access and design to the customer, while a retail platform for smaller amounts, we aim for it to be much simpler and much more much quicker, much, you know, as we expect from, let's say, modern blockchain systems. You know, something like DeFi, you just want to have swaps within a few clicks, and the difference between these two will be, of course, the amount of money transferred. And then we also discuss this security as a service potential. We definitely see an opportunity. We see a pain point in cryptocurrency in public blockchain usage, is that painful seed phrase. If that seed phrase is lost, the tokens are lost, the value is lost. So we were discussing some systems of retrieval of tokens in the case of, you know, emergency, potential death, you know, things like that, through basically some multi-sig schemes in the beginning, and then insurance that we can partner with outside institutions to ensure the tokens and ensure the ownership, etc., etc. This is a bit further down the road, but we are also considering having a full suite of products that people will be excited to use and feel comfortable using.
Thanks, Fillip. And I know that we're getting close to Q&A now. So actually, these last few slides, I'm just going to be very quick about. So just a repetition, we are aiming to launch our institutional platform Q2 this year. We have a partner in the Channel Island, and we have an initial supply of 10,000 kilos, which is a huge amount. And if we tokenize all of that, we would be one of the top 3 gold tokens providers in the world. And that is also our goal. But metals, gold, silver, etc., they are considered our stable foundation. From that, we will move into all sorts of tokenized assets, which will be governed by our DAO, and other projects can seek funding and be launched on the twin platforms. And then very quickly also just a little bit about our monetization or financial model, because a lot of people say they're going to tokenize this or that, but there is no financial model behind it. There is really no way of making money. And when you launch a business, you've got to make sure you can make money. So we have 4 primary sections in which we make money. One is the trade margins, which we have with our gold suppliers, and we have transaction fees, which will also be very competitive, but there will be some income from that. And the gold monetization, which we mentioned earlier, which would be about a novel way in which the underlying assets will be used as collateral and for loans and then invested into traditional low risk instruments, and the yield or potential yield split then between the token holders and also a part going to us as a platform. And then as Fillip mentioned just now, other services, digital custodial services, also concierge tokenization services for people and institutions already holding a lot of physical gold, for example, in our vault in Guernsey, and where we will take on concierge assignments to make that gold tokenized. Yeah, this is just a very quick introduction into the gold monetization, which is basically depending on what the market is doing. Right now, the market shows that US Treasury bills is a very easy, low risk financial instrument to earn a potential yield. But in other type of market environments, it could be more advisable to look at gold lending or other types of instruments to make a potential yield. So this is a model that we've developed together with Eileen, and we're all continuing to even make it better as we go along. So there's a lot of exciting opportunity there. So I think we're going to leave some room now at the end for answering some live questions. I've
been typing as answering as many questions as I could, but there was a particular.
I don't know yeah. I just wanted to say, if anyone wanted to connect to us on LinkedIn, these are our QR codes, and also at twin.com you can find the links to all our socials, our Telegram, Discord channels. It's very easy to get in touch with us. So, and we hope to talk to you there as well. And thank you very much. But let's. I'm not quite sure if we open it up to people asking those questions live.
I think we can read questions that have been
great
asked first.
Okay.
So we have a question. First one: what strategies does Twin employ to educate potential users and accelerate the adoption of tokenized assets among both institutional and retail investors? I would. I don't think I'm the best to answer this, Lisa, but I would.
I can
maybe
go.
with the RWATA, maybe that's yeah.
Yeah. So it's manifold because it really depends on the target group. But right now, our focus on our go-to-market strategy is on the institutional and high net worth individual segment. So in terms of educational purposes, we have several points in our plan. One is our PR initiatives. We work with a very high level PR agency that will be employed when we're more closer to go to market. They will make sure that suitable articles are in the kind of media that institutions and high net worth individuals read. So that is gaining interest. We will have a series of webinars, both hosted by ourselves, but also in cooperation with, for example, legal offices, which want to provide extra information to the clients. So that's another way of both reaching out and educating. We know that, for example, investment offices and fund managers at funds usually use webinars as a way to educate themselves. There will be an array of, whether it's blog posts, contents, and social media. We'll be attending lots of events and also creating educational videos specified for those target groups. Thomas, did you want to add something?
I was just going to say, by going to twin.com, you will also see some of our advisors, and one of our advisors is a very prominent PR guru So it's yeah,
It's not actually on the website, Thomas. That's just in our deck. We haven't publicized that. So.
Okay, then my bad.
Okay,
Sorry,
it will be. It will be later on. Yeah.
Right.
So
do you
the
want
next
to...
question, maybe I can read the questions and
Yeah,
that'd be
go
great,
answer.
Fillip.
Yeah,
Yeah.
sure. So this is Sergio is asking regarding NFT token linked to precious metals. How the precious metals are stored in a safe, in a bank? Are they checked by a kind of third-party authority like SGS or Bureau Veritas or Veritas? We did not mention this, so maybe Thomas or Lise, we can explain where the physical gold is stored.
Yeah.
So our partner. Okay, Thomas, you go ahead.
Well, I could talk about the secure storage. So as Lise was just about to commence with, our partner has a physical vault in the Channel Islands. The fact that it's on an island makes it also more secure than many vaults around the world. All of the metals that we are tokenizing, so the gold, the silver, and then later on the platinum and palladium, will be physically vaulted and stored in this vault in the Channel Islands. What's also a real upside is that the physical metals, when they were being in this vault, they also then come with an LBMA certification. Which is the very sort of like Rolls Royce of certifications of metals. So the tokens that have the underlying asset that sit, or the assets that sit behind the tokens, all of the metals will be securely, as I said, vaulted and stored in the Channel Islands.
Yes, and I could also add that the physical metals and the vault are being audited by an external audit company. So it's not just them telling us we have the gold. They're also a regulated financial body. They're under stringent control by the regulators. So it's very, it's not just, oh, we have it. It's a proper setup.
I think we could also just explain in terms of our partner, they are overseen by two regulators, the GFSC in Guernsey and the GFSC in Jersey, and both regulators require that as a secure storage of precious metals, that they have periodic audits that happen, and as Lise just said, that these particular audits are of the very highest standards. So that is something that we also see, that what we're bringing into crypto is a little bit of seasoning from the TradFi side of things that really do work, and we do believe that the auditing structure that our partner has in place is the type of confidence that's going to allow us to expand into global markets, and especially when we are coming to offering our services to retail. That's going to be incredibly important that they have that sense of trust that the physical metals are actually in storage, and those physical metals, if they have the token, are actually their assets.
Okay, so the next question is also from Sergio. In the context of representing ownership of precious metals on the blockchain, why was Cardano chosen over alternatives like Polygon, let's say? What specific attributes of Cardano align with the project's goals for tokenizing precious metals, and how does it address challenges unique to this asset class compared to other blockchain platforms? So maybe I can take the technical part of this, and maybe Lise or Thomas can go into a bit more social component of that. So as I also, I believe, answered this in text earlier, simply we chose Cardano because we know Cardano. Cardano is something that is familiar with us. We are familiar with the community. We are familiar with the technology. We know that Cardano's security and the extended UTXO model determinism caters very well for this sort of asset class. We also have this belief that if token is yours, it's yours. We don't really want to necessarily have the power to freeze the token, take it away from you. You know, we don't really think that's the best way. We don't think that's ownership, right? We believe that ownership is if you have something, it's yours and you can do with it what you like. But in that sense, do I think that Cardano is the only platform that should do that? By no means, you know, and we are definitely not, you know, maximalists in that regard. What we definitely want to achieve, as I said before, is this security and trust. People need to know that this system works, right? And if this system works on Cardano, then we can put it on Ethereum or Polygon or Avalanche or whatever other chain. We consider that this is a way for people to tokenize gold. This is a product that people would want to use, and within a certain period of time, they shouldn't care which blockchain it lives on, right? Because in the end, it doesn't matter. It matters that they are certain that this works, right? Whichever blockchain they are using. And we believe that we can get to the highest point of that security the fastest by using Cardano. So I would say that's a bit of technical. I don't know, maybe Thomas wants to add a bit of, you know, social alignment with that. I know he's passionate about the retail platform, and etc.
Yeah, thank you, Fillip. I mean, what you know, as Fillip mentioned, and as we alluded to earlier on, and you know, we've spent a lot of time with Cardano. We come from Cardano. We understand Cardano. One of the things I particularly admire is the community. It's still, you know, by a long shot, got one of, if not the most amazing community of all chains. We have to create a strategic approach, and we've already mentioned that starts with institutional adoption. When we can have a demonstrable show of institutional demand, that's going to allow then the regulators to be more, we believe, more welcoming in opening up a true retail or a retail holistic retail approach. And when we are thinking about or you know, which chains we need to be focusing on from the get-go, then one of the most important aspects is the community, and I think Lise can also sort of add on to that, especially because she's been working with the Cardano community on several projects, and we've been planning on how we're going to be building up the Twin brand within the Cardano ecosystem. But it's the sense of pride that we see from the Cardano community, and that as Fillip alluded to, we also love about Cardano is that, you know, when you own an asset legitimately, and that is your asset, then we are very strong believers that, you know, assets that you hold, that you're entitled to hold, are precisely that's what you should be doing, holding them, and no one else should be able to take those assets away from you.
And I think also, as the ending point of that is, you know, from the start, Cardano has had a focus on sustainability. They didn't go for proof of work. They went for proof of stake right from the beginning. There's low transaction costs. All of those, if we think about blockchain as the technology of the future, because everyone who's in blockchain right now, we're very early movers still. And in the future, you're looking at a very different generation that's going to be growing up using blockchain as almost natively, you know, in a way that we can't even imagine. That generation, there's no doubt, has a much more focus on sustainability. They care about the companies that they interact with, and that they have the right kind of, I would say, ethical backbone. And I think
culture.
Yeah, and culture, yes. And when it comes to that, I don't think anyone beats Cardano. So, you know, there's great technologies out there, and there are great communities in every chain, I'm sure. But, you know, the ethos of Cardano aligns perfectly with the ethos of Twin, and that's why we have it as our hometown.
There was one question, Philip. I don't know how long we've got left, and I did answer it, but it was an important question. If we could draw attention to it about, do you have to only engage with the Twin platform in order to hold the token?
Yeah, I believe Simon also wrote it a bit differently. Can these tokenized assets only be traded on regulating clearinghouse type institutions, or will DEXs do?
Right, and I think that's a really important point. So coming to the Twin platform, you will need to successfully go through a identification process or a KYC. But once you own the token, it's not for Twin to stop you taking those tokens. Those are your assets, they're your property. Taking those tokens wherever you like. You may want to take them into a cold storage, or you may want to trade them elsewhere or sell them on a secondary or tertiary market. That is something that we fundamentally believe in. That's the element of the DeFi or decentralization that we really dig. So the short answer is no. We need to make sure that we're compliant with the regulation or regulations that we are adhering to, and that is making sure that we know our customer and that we know who we're selling to. But once you have purchased, whether it's the gold token or the silver token, or as we move further into Twin's trajectory, it could be the coffee or the coke or the cocoa or the copper, whatever the token is that you decide to invest into. Those are your tokens, and you can do what you like with them, and you can take those tokens wherever you wish. If I could give an example, let's say that I initially have bought a gold token of Twin, and I sell that token to Fillip. He may not be a Twin user, for example, but if then Fillip wanted to redeem that token back into either crypto or fiat, or indeed into the physical metal itself, which is totally possible, then Fillip would, he would then need to go through the KYC plan. So that's really what I wanted to point out, is that when you come to the platform, there is a KYC process that we put you through. But once those tokens are purchased, then you're free to take those tokens wherever you like and trade them wherever you wish.
And we are also going to be listed on other platforms. We have several inquiries from many different platforms who want to list Twin Gold, and we are also looking at potential sexes, etc., to list it. So there'll be many ways in order to be able to buy it. So I think that's our time up. So, but we'll be able to go in and answer questions once this video is uploaded to YouTube. Please also just join us in Telegram and Discord, and we can continue to answer questions there, or reach out to us on LinkedIn or in any other way or form. So thank you very much for being here with us today, and thank you, Umar, for organizing this and
thank you very
inviting us
much
to talk at Let's Talk to Cardano. Thank you.
All right.
Thank you.
Okay, thanks guys. Bye for
Bye-bye.
Thank you.